What's up? How's it going, everybody? Hopefully, everybody's having a pretty good day. Anybody long Bitcoin up 20% in a 24-hour period is pretty daggone good. Definitely fun to watch. Uh, but everybody's asking me, "Well, what the hell do we do now?" Uh, I'm going to show you what I'm looking at, and maybe they'll give you some tidbits on what's going on. Maybe it'll help you out. And again, not financial advice. Just kind of sharing where I think some support and resistance is going to be in the market, so you can make your decisions of when the market gets to those certain levels. Uh, let's take a look at the Bitcoin versus dollar. This is a weekly chart, so I'm looking long term, broad trend market. Uh, Couple of things on here just to kind of give you a view of what's on the chart. The orange line here is the 55 exponential moving average. The blue line, the darker blue lines are the trend lines. I got some Fibonacci retracement lines on here. These two red lines I have on here is kind of this area that I'm looking at for support, kind of a support zone to look for on any dips in the market. We actually had one earlier as we got up to this 61.8% level at 13,488, where I was thinking we'd find some selling interest. And then I put this chart out earlier thinking that we'd dip down into the zone before we'd head higher. We actually dropped all the way down into underneath the 11.5 I was kind of looking at. I think it got to 11.3 before it started to take off. We'll look at the daily here in a minute, but on the weekly chart here, it dipped and then it kind of bounced up. So this is that area of support that I was looking at. This trend line is really going to be my guide of support going forward. So even though it's kind of bounced into this zone or bounced out of the zone, I still think we can get down there and test it. But I would not be surprised if we started busting out to new highs here and seeking out that 16K level. Or that 78.6% level on the Fibonacci retracement. But getting back to what else is on the chart, this lighter one here, this lighter line here is another little trend line, a little bit longer term. These two vertical lines are just the points of break on the trends that I was looking at. So it gives you kind of a visual of what we're looking at down below. The ADX is the black line here, and then the directional index is plotted with it. And then I got the RSI down here, which is the orange line, and then the bullish and bearish zones that I'm looking at. And then I was just kind of circled the last couple times the RSI hit the top of the bullish zone. And then right now we're not quite there. That's why I think we got a little bit more higher to go, because every time this kind of hit here on the bullish zone and hit this high, it was at the time in the market when we were kind of topping out. So with this latest move to the upside at 61.8%, we found some resistance, but I don't think we're quite done. I think the way this freight train's going, I think we go a little bit further. So I do like that dip that we saw today, and we found some buying interest pretty quickly. So anybody that saw my chart this morning, you can see what I'm talking about. But that's what I'm looking at on the weekly chart. So keep an eye on a couple things here. One, the 55 exponential moving average. The last video I talked about, we hit a lot of the support, which turned to resistance, and then turned back to support kind of deal. As this was breaking to the upside right here, breaking above the trend line, breaking above the 55 exponential moving average, the momentum for trend was getting stronger and stronger for the bulls. And then that's where we busted into this bullish zone. And that's where I think we're going to continue as we move forward there. So, not much different on here besides that we got to the 13.4 that I thought, or 13.488 that we would get to. Went past it a little bit. 3% beyond that line was about 13.8. And that's kind of the level that I was telling people that it could kind of spike to. We got pretty close to that, and then it sold off, went right down into the 11,000 range within so fast. But we got down to that, bounced back up, and we're currently at about 12.5 at the moment. So I still like this support level. If it does drop again, since it's already kind of went into that level, I can see us make a new high. So just keep an eye out for that. So let's take a look real quick at one other chart that I want to pop in here. Let's look at the Elliott wave chart. This is the wave pattern that I've been following for a while. Uh, everybody's been, I was pretty exuberant on where I thought prices were going when I started looking at this. So if you've been following me, you've been following this wave count with me. And right now, I know there's a lot on this chart, but the main thing I was looking at on this daily chart right here is the trend line break here with these blue arrows, and that the blue arrows has an objective of about 16,600, which is pretty close to that Fibonacci line that I think that we could get to. But I was thinking that we might dive down into where this is kind of this last fifth extended wave to finish this first wave to the upside. And within that wave, we are on this latest move to the upside is wave three, and we kind of hit that 61.8% level that we were looking at on the weekly chart, and then the market dropped down into into that 11.5 or 11.3 area here, which could be the four with that with a mark down to the side. But I think we can probably consolidate in here a little bit before we head higher. But I like this 3, 4, 5 to where five should get us to at least that 16.6. If things get a little crazier, maybe all the way up to the previous all-time high of 19.8. So before we get before we get done with this complete wave to the upside here. Down here we got momentum for trend. We're in the bullish zone on the RSI. Everything's looking good. When it comes to all the Fibonacci retracements, if we do end up getting all the way to the 19.8 on this move, and then you take the Fibonacci retracement, you're looking at 9.5 as a crash to the like a major move to the downside to where it kind of corrects against it to where you get a wave two before we start a wave three to the upside, which could take us, I got it measured out to possibly, you know, 29 or so with a move down there and then even further later on. But you're talking, you know, this isn't to scale, so this is going to be way out into the future. But if we do get up to that 19.8, look for a possibility of dropping down into 10,000. But what I like, but by the way, this pattern is working, I like the shallow Fibonacci levels because that's what's been kind of happening on some of these retracements is to keep this bullish move going. I can see a wave two coming down to the 38.2% level, which is at 13.4. If we get to the 19 or so, that would be a level that I would watch for to be a pretty significant level, which kind of matches pretty closely to the 61.8% level that we were looking at on the other chart. So all in all, I like where we're at. If we do dive down into the 11s again, I think we're going to find some buying interest just like we did today. And maybe we consolidate between 11.5 and 13.5 for a little bit before we head higher, or we could be at 16,000 before I even get off this call or this talk. So either way, that's what I got where I'm at the moment. So going forward, any dips to 11.5, I'm buying. That's where my buys are going to be sitting. I actually had a buy sitting in there on the dip. I kind of missed it because I had a little bit shallower than that, but it didn't quite drop as far enough because I was trying to wait for it to get into that zone. But buy dips, the sentiment is still there. I don't see enough information for me to top out at the moment. So I still think we can test highs and maybe get to that 16K. So that's where I'm sitting at the moment. Happy trading. Peace out.